So students, under charging section, now what we need to learn is on what, right? We learn which period, who should pay, and on what. Then the important discussions comes, right? This is the important discussion throughout the income tax discussion, right? This is very large area. All the subsequent section refers to this tax on taxable income, and few part refers to the final withholding payment. So you need to understand what is taxable. Now tax need to be paid on taxable income of each person for a year of assessment. Taxable income for a year of assessment of each person. Different way you can say, right? So ultimately you need to understand what is taxable income, right? And what is final withholding payment, right? Two part for the income tax, taxable income, final withholding payment. So students, now charging sections part is done. They are saying that tax should be paid like this on a year of assessment by person on a taxable income and final withholding payment. Now rest of all the sections define what is taxable income and how you compute it, and what is final withholding payment and how you identify it and compute it, how you compute tax liability. So let's go to our act. Here see the act. Person has a taxable income. Now you need to understand what is taxable income. Taxable income, first part. Then final withholding. You need to understand what is final withholding payments, right? Here student, under charging section, this section 2, 3 and all explain how you compute the tax, right? Before understanding these subsection, we'll go to understand what is taxable income. Not comprehensively, but in surface level understanding for you to get the understanding of section 2 correctly, right? If you want to go comprehensive understanding, you need to finish this lecture series on income taxation, right? Right. Next division, chapter 2, income tax base. Division 1, taxable income. So these are not much important for you to remember. What is important? Section 3. Section 3 defines, student, what is taxable income, right? Subject to subsection 2. That means this section. Subject to subsection 2, the taxable income of a person for a year of assessment shall be equal to the total of the person's assessable income of the year from each employment, business, investment and other sources. Right, what does it say? Let's write it and then understand it. What is taxable income? That is very important, right? If anything comes under taxable income only, that will be get taxed, right? Taxable income. Section 3 section 3 sets what is taxable income. Subject to subsection 2, still we haven't read this. Taxable income of a person for a year of assessment shall be equal to the total of the persons. Right, let's write it. Total of persons assessable income for the year from each total of the persons, assessable income from each employment, business, investment and other sources, right? Employment, business, investment and other sources. These are sources. We call it sources, right? So section 3 defines taxable income as assessable income. Another word for you to see. Assessable income, right? Assessable income, right? So you don't know what is assessable income. That's in simple terms, general understanding. It's income that can be assessed, right? Ascertained. Assessable income from each employment. Now it's give some structure. Employment, business, investment and other sources. 4 type of sources it discuss, right? Assessable income from these 4 is taxable income. Now remember that it said subject to subsection 2. So let's see what is subsection 2 say. Then section 3 subsection 2. In arriving at taxable income of a year of assessment, qualifying payments and relief for the year under section 52 shall be deducted. Right. What is the meaning? Subject to subsection 2, that means this income should be taken after deducting this. Right. This income need to be taken after deducting this. Right. After deducting this. Right. So that's very important. Let's see. Let's take it into right. After deducting, what is subsection 2 says? Taxable income refers after deducting qualifying payment. Qualifying payments. And reliefs under section 52, right? That's the subsection 2 says. Section 3 said you need to take assessable income from each of these source for the taxable income. Then subsection 2 said in arriving this income you need to deduct qualifying payments and relief. Then only you arrive at the taxable income, right? So that's the wording. The taxable income, next section, the taxable income of each person and the assessable income from each source shall be determined separately. So what does it say? Subsection 3. Section 3, subsection 3. The taxable income of each person, and the assessable income from each source shall be determined separately. See that, now it's very clear, right? First one, taxable income for each person need to determine separately. Let's say you and me, two different persons. So your income need to be computed separately. My income need to be computed separately. Each person taxable income should be computed separately, right? Why is that? Now imagine, students, now there could be a person who is married, right? Let's say a gentleman married and his spouse is there, right? Now this spouse is also earning from some small business, and this gentleman also working in a company and earns salaries and have investment income, right? Let's say. So this family, it's a family, husband and wife. Husband and wife, right? Husband and wife. They will think, now why we should pay tax separately? We should get together and pay taxes for our family, right? Family. They will think one installment payment for the entire family is enough. No, law has to address it, student. So law says, no, even your husband and wife, you need to pay separate tax. Separate taxable income. Separate taxable income, right? You need to pay separate tax. Let's say father and son. Father and son. So father would think, my son is still a kid, he cannot pay tax, but he is earning from maybe online trading, whatever the means that he learned at his age. So his tax also father should pay. He might be thinking, this complexity, this thinking could be there in the society, student. But lawmaker has to address it. What lawmaker says, no, you are separate individuals, separate persons, right? Therefore, you have to pay tax separately. Father pay tax separately. Kid, even though he is less age, son, he has to pay tax separately, right? Likewise, what else? Company owner, shareholder plus company. Now two different persons. Right? For our law, that's two different entity and individual shareholder. Two different persons. Now this person would think, now this company is my company, I am owning it, so my income is there, so I take this company's income to my account and I pay tax for both company and myself. So same thing, they will think like that. But student who learn tax explain that no, you are two different person. Under section 3 you need to pay taxes differently, right? You cannot add it up, right? Because it should be computed separately. Taxable income of each person shall be determined separately, right? So that need to be explained. What is the explanation? Taxable income of each person shall compute separately. So this is wrong, this is wrong, this is wrong, this is wrong, right? You need to pay taxes separately. If you are a single person, you need to pay separate tax, separate taxable income. You need to compute. So that's the meaning of this part. This part, taxable income. I'll get it in another color. Taxable income of each person shall be determined separately. Right? So what else? Next one, the taxable income of each person and the assessable income. Next one. accessible income from each source shall be determined separately. Now next one, accessible income from each source shall be determined separately. Next one. Accessible income of each source shall be determined separately. So student, under the act, what is the source? Employment, business, investment and other sources, right? So these four type of sources need to be computed separately. So student, it's real question. No? Now someone who is paying tax, let's say myself, I am having interest income, dividend income, and I am having my employment income, my consultation income, my lecturing income and my business income, all income I am having. So I am paying tax on all those income, right? Then I will think, so I am taking my total bank statement, total income received, then I pay tax on that. No student, law say you cannot do it. You have to segregate each type of income into different sources. First one, you need to identify separately what is employment. What is employment? You need to identify separately, right? Next, you need to identify what are your investment income. Let's say I invested in a company, I received dividend. Let's say I invested in a fixed deposit, I receive interest. Likewise, what are your investment income? Investment, right? Accessible income from employment, accessible income from employment, accessible income from investment. Then you need to identify accessible income from your business, right? Then accessible income from other sources. These separate source need to identify separately, right? You cannot take it together and say your income is total this much, right? You have to say my employment income this much, my investment income this much, my business income this much, right? It should be change employment, then business, then investment, right? Likewise, right? It should be come in order. Level of predominance principle, right? Employment, business, investment, then other sources, right? So these are the way you should compute your accessible income rules, right? So section 3, very important section, it defined what is taxable income. So you learned it, what is taxable income, right? So then your question is, what is accessible income? What is called as accessible income? What is employment? What is business? What is investment? What is other sources? Right? These are your questions. These are addressed through later part of sections in the Inland Revenue Act. Accessible income is defined under section 4. Right? We will discuss. But for the time being, we will understand section 2, charging provision, and this taxable income part. Now this is done. No? This is done. Taxable income, you should have somewhat of understanding. I'll make it further clear, right? Further clear. So based on that discussion, student, the proper way you can interpret your taxable income is, you take first accessible income from employment, employment. Let's say, right. Next you take, now you have to take separately. Next you take, you have to keep the order proper. Right. Next you take accessible income. In throughout this session I will using this short form, accessible income. Accessible income from, what is the next one? In order given in the section 3, business. Right, you will understand why it is important. Right. Next one, accessible income from investment. Right. Next one, accessible income from other sources, right? So you have to take these sources of income separately. Then what you do? You take total, right? Total. Now see the section. Subject to subsection 2, the taxable income of a person for a year of assessment shall be equal to the total of the person's assessable income for the year from each employment, business, investment and other sources. So subject to subsection 2. In arriving taxable income of year of assessment, qualifying payments and relief for the year under section 52 shall be deducted. So still no taxable income you arrive. This is we call total. We call total accessible income. It is not taxable income yet. This is total accessible income. Now to apply taxable income, to arrive taxable income, you need to deduct under section 3 subsection 2 qualifying payment. Qualifying, you will learn what is qualifying payment. Qualifying payments and reliefs. Qualifying payments and relief, right? So there will be a qualifying payment and relief. Right. Then taxable income is this. Taxable income, right? So qualifying payments and relief is some incentive to protect the progressivity in tax system, right? You will learn that those are tax concepts. It's better if you have proper understanding on principles of taxation from your previous levels of discussion, right? I know in the early stage of your career, of this chartered career, you will learn tax principle. That's very important at this level, right? So this is the taxable income, student, right? We need to learn what are the accessible income from business, all those things. But now you have clear understanding on what is taxable income, right? So now charging section impose tax on a person for a year of assessment who are having taxable income, right? Who are having taxable income. So now you know what is taxable income. Then next question. What is the next question that you will have? Section 3 done, right? Section 3 done. We will not go to assessable income part at this moment. We will finish section 2 and come back to this, right? Right. You know the now taxable income. Next question, what is final withholding payments, right? It's a lengthy discussion that we need to take separately, but for the time being, I'll explain it roughly, right? For the time being, I'll explain it roughly. So students, let's see what are final withholding payments, right? So before this term final, before we are going to term final, let's understand what is withholding taxes mean, withholding payments means, right? So students, it's a, now this act, IRA, charge tax, no, charge tax, and it collect tax in two methods, right? One is by installment, not only two, by installment, right? And another mean is by issuing assessments, and another one is by withholding tax. That this concept need to be understood, right? It's kind of collection mechanism. I'm talking about withholding, right? Withholding tax, not final withholding, right? It's two different, right? It's two different things. Final withholding payments is not equal to the withholding tax, right? It's derived from it, right? It's derived from it. So to understand this, we first need to understand what is withholding payments, and what is withholding tax, right? It needs separate discussion, right? You need to understand what are the payments, what are the tax rate, everything. But for the purpose of understanding subsection 2, I'll explain in summary form, right? So student, let's assume there is person A. Person A is there, right? This person has rented a shop, right? Office space he rented, right? He rented it. He need to pay rent to person B. Let's say it is 200,000 per month. 200,000 per month. This person pays rent to person B. So who is earning income? This person earns the income, right? Person B earns the income. So person B need to pay tax on his taxable income, and final withholding payments this person receives, right? Person B need to pay. So what Act says, student, there are two methods of payments now. So there is another mechanism that when you pay this 200, you deduct tax at the source. Withhold, you deduct tax at the source. This person deduct tax from the income this person derives, right? This person deduct tax from the income this person derives. Let's say it is 10%, you deduct 20,000 and you pay only balance 180,000, right? Let's say that's the scenario. You deduct 200,000, you need to pay rent of 200,000. What you do is, at the source, before this person getting the income, at the source, what is the source? The payment made by this person. This is the source payment. This person deduct it and remit only balance 180. So this person has already paid 20,000 on his income. Why? It has been withheld by this withholding agent. We call this person as withholding agent. This person withholdee, right? Withholding agent has deducted tax and this withholding agent will remit it to IRD, Inland Revenue Department, right? So this mechanism is there in Inland Revenue Act, right? So there are various type of payment, right? Such as rent, interest. When you have interest income, another example, bank, right? Bank. This person let's say B has deposit 1 million, let's say. So interest income is 100,000, let's say. Your interest income 100,000. Bank, when remitting 100,000, deduct 10%, let's say 10,000. So balance 90 only this depositor will get, only balance 90. This 10,000 will be remitted to IRD by bank as agents of IRD, right? This is the process of withholding tax in simple term. We will learn it comprehensively, right? This is the simple process, right? So student, there are certain type of payments that are categorized as final withholding payments under section 88, final withholding payments. So someone receive final, you see under section 10 it says person who receive final withholding payments need to pay tax. So when person pay, let's say dividend, you have this person B invested in company, then this company pays dividend, let's say 100,000, right? 100,000. So this company deduct 15,000 at the source and remit only balance 85. Let's say rate is 15%. You get only 85. So you have, your income have already been subject to tax. This tax will be paid by the agent to the government. So you are receiving only the net income, right? You are receiving only the net income. So it's final. Why the term final comes? Once this withholding agent deducted the tax, this 85 do not get tax further. It's a final tax. This 85,000 do not get tax further, right? No more tax on this 85,000 at the hand of person B who receives it. Final withholding payment is received, that is 85,000 net amount. So this 85,000 would not get tax again. It's a final tax. This tax deducted at the source is a final tax. So we call this as a final tax. Withholding tax two types, normal one, right? Let's say, now forget the story of final withholding payments. Let's say it's a normal. Now 85,000 you are receiving, right? This is deducted at the rate of, let's say 15%. Let's say it is interest. This is deducted at the rate of 15%. Let's take earlier example, bank what? So you are getting 90,000, right? 90,000. You paid tax. On behalf of you, agent of the government deducted 10,000 tax. Balance you received. For this balance also you need to pay tax based on your tax percentage. Let's say it's a company 30%. Individual up to 36%, right? Balance also will be subject to tax. This 90 also will be subject to tax. And this 10,000 you will be deducted as a tax credit, right? That's a normal withholding tax scenario, right? But when comes to final withholding tax, this balance you are receiving will not get tax further. That's why it's called final withholding tax. it is covered under separate section, that is section 88. It's not coming under normal provision of that, right? So student, it does not get taxed further. That's the meaning of final withholding payment, right? Currently the easy final withholding payment for you to understand it's dividend paid by a resident company is a final withholding payment. There are other, but for the moment you understand that as a dividend, right? So now I hope you know the clear difference between withholding tax and final withholding tax. What is withholding tax? What is difference between withholding and final withholding payment? So person who are receiving final withholding payments, their tax liability is relieved. No further taxes. Relieved. We called it as relieved. Therefore, no taxes. So now we, under section 2, we understood what is year of assessment, who is person, and what is taxable income, and what is final withholding payment, right? So next we need to understand balance part of section 2, other subsection, which explain how to compute tax liability. Let's see. Right, student, the balance part, right? Look at carefully. Subsection 2 of section 2. The amount of income tax payable by a person for any year of assessment shall be the total of the amounts payable under subsection 1. That we learned already, right? So amount of income tax payable is tax on taxable income plus tax on final withholding payment, right? So final withholding payments, you already paid tax on that. Your agent already paid it, right? So both are the amount of tax, right? Next one. So I'm not going in deep on this section. It's clear already, right? So if you want, I'll draw it like this. Section 2, subsection 2. Amount of tax payable equals a tax on taxable income plus tax on final withholding payments. So this is the total liability. However, this part already deducted by WST agent and paid to the government. So amount of tax payable. Amount of tax payable, right, correct. Let's go to next section. Now comes some important parts also. The income tax payable, subsection 3. The income tax payable by a person under paragraph A of subsection 1 shall be calculated by. Right. Now earlier we learned how to compute taxable income. Here we discuss about taxable income, no? Under subsection 1, paragraph A. Now they are saying how to compute the tax liability using taxable income, right? How to compute the tax liability using taxable income, right? We'll write section 2, subsection 3. Compute income tax. income tax. Compute income tax. That's what called section, that's explained in section 2 subsection 3, right? So let's read again. The income tax payable by person under paragraph A of subsection 1 shall be equal to, right, tax on taxable income. Taxable income is equal to I'll write it in this way. Tax on taxable income equals applying relevant rate of income tax set out in the first schedule to this act to that person's taxable income. So simple things. Taxable income into tax rate under first schedule of IRA. See, now power for first schedule has been given using section 2 subsection 3. Now if this schedule was there without any power being given by an section of the act, then it's not valid. However, now section 2 subsection 3 says you can apply rates, tax rate mentioned under first schedule to the IRA into your taxable income, then arrive at the tax liability, tax on taxable income. So it's very clear now. Now it's very clear. This is the formula. How you compute your tax liability. Earlier we discussed taxable income computation. Now you know how to compute tax liability, right? Let's see next. Deducting any foreign tax credit claimed by and allowed to the person for the year under section 80 of this act, and deducting any other tax credit granted or allowed to the person for the year under this act. Now discuss. Earlier it says taxable income into tax rate. Now it says you can deduct foreign tax credit. Foreign tax credit and also other tax credit. Other tax credit. From this liability you can deduct this too, right? If you arrive to your taxable income, first step arriving taxable income, then multiplying it by tax rate, then deducting this tax credit, then you arrive to your balance taxable income, tax liability, balance tax liability. That's how you compute entire tax liability, right? So I'll write it here again. Tax on taxable income equals let's say taxable income multiplied by tax rate. Let's say you are arriving at liability, right? Then you deduct under section 2 subsection 3 item B. right? Item B. Foreign tax credit. Foreign tax credit as stipulated under section 80. What is this foreign tax credit, students? Foreign tax credit means taxes you might be paid at foreign countries, right? So it's a separate discussion. For the moment of understanding this charging section, you understand it's taxes paid in foreign countries, right? Next one, other tax credit as is stipulated in this act, right? Other tax credit, deducting any other tax credit granted or allowed to the person for the year under this act, right? Other credits, right? Any other credits granted, so you deduct it, then you arrive at the balance tax payable, income tax payable, then you arrive. Income tax payable. So this is your tax on taxable income. Two parts. First part is this, right? Now let's see other part. Subsection 4. Right. The income tax payable by a person under paragraph B of subsection 1 shall be calculated by applying the relevant rate set out in the first schedule to this act to each final withholding payment. See, now what is this we are referring? Paragraph B, right? Section 2, subsection 1, paragraph B, that is final withholding payment. Now it says how to compute tax for final withholding payment. You are receiving dividend payment, then you apply this rate in first schedule, right? Then you apply this rate in first schedule, arrive at your liability. However, under section 88, it already been deducted by withholding agent. Therefore, no further liability, right? We will learn future. Final withholding payment you receive, you apply first schedule tax rate, right? You apply first schedule tax rate. So what happens? If you apply first schedule tax rate, there is no, if you applied, you are arriving at your tax on final withholding payments, and there is no further liability since it's relieved under section 88, right? So that's how you compute your entire tax liability under charging section, right? So this is an important discussion, students. Now you have overall wider understanding. However, you need to make a summary on that, right? Now take 2 or 3 minutes, think about what we learned under this charging section and make a summary on that before I am proceeding and teaching. Right? Take 5 or 10 minutes and do it you alone. Then only you will remember all this provision, right? Make a summary on your own, right? And this is important. Now you can develop a format, right? Now this section, throughout these wordings, you can develop a tax computation format, right? So this format will be used for computing any person's tax liability, right? Any person tax liability, and for your exam as well, and for anything you can use this format. So how you develop it? Now think one by one, each line, right? Then develop that format on your own, right? Take some 5 to 10 minutes, think about what we learned and develop a format of tax computation. So students, this is the format of income tax. Computation. Derived form. Derived as per section 2 and 3, right? We learned section 2 and 3. Now we can develop a format. So under section 3 we learned that taxable income should be computed separately for each source, right? And you need to deduct qualifying payment and relief in arriving taxable income. Then you arrive taxable income, then under section 2 you multiplied it from first schedule tax rate, then arrive gross tax liability, then you deduct tax credit. That's how you compute it. So let's write the format. First one, part A, right? Tax on taxable income. So first thing, you need to take assessable income. Under section 3 we learned income from employment. Next, you need to take assessable income from business. Next, you need to take assessable income from investment. Next, you take assessable income other sources, from other sources. Then you take total assessable income. Total assessable right. Then you deduct qualifying payments and relief. Qualifying payments and relief under section 52, right? That's fifth schedule. If you learn further, we will learn fifth schedule, right? Then you arrive at taxable income. Then you arrive at taxable income. This is your taxable income, right? Then what you do? These are coming under section 3, right? All these are coming under section 3. Then you deduct, you apply tax rate as per first schedule. You multiply from tax rate, right? Let's say 30%, let's say, right? You multiply, don't take the 30% itself, some figures, right? Then you arrive at gross tax liability. This gross word was not there. Normally, general understanding that before deducting something, it's a gross amount. Gross tax liability. You are right? Gross tax liability. Right. Gross tax liability. Then what? You deduct, as we discussed under section 2, you deduct foreign tax credit. Foreign tax credit under section 80. Then other tax credits. Other tax credit. Other tax credit under IRA. So for your understanding, right? For your understanding, I'll explain what are the other tax credit. Right? For me to do that, I need more space. Right? That's fine. I'll give further space and write it. Self-assessment, quarterly tax payment and final tax payment, self-assessment, tax payments. Then withholding tax, right? Then previous year's tax refund, tax refunds. We will call 60% of previous year tax refunds, right? Likewise, there are many other tax credits, mainly those things, right? Mainly those things. You deduct total of this from here, right? Then you arrive at balance tax payable. Balance tax payable. So this is the final tax on taxable income answer, right? This is the final part. Now student, you might have a question. This is part A. This is part A only. What is the part B? Part B is tax on final withholding payments. You take that liability also here. Amount you take final withholding payments received here, tax deducted at the source, tax deducted at source. So liability relieved, right? Liability relieved, no more further liabilities. Part A, part B now should be very clear for you. Right, here, hope you can clearly see it. Tax on taxable income, first assessable income from employment, assessable income from business, assessable income from investment, assessable income from other sources. You take total assessable income, deduct qualifying payments and relief under section 52, arrive taxable income, then multiplied by tax rate, you arrive gross tax liability. From that you deduct tax credit, foreign tax credit and other tax credit. Other tax credit include self-assessment tax payments, withholding tax, 60% of previous year tax refund if there are any, and balance tax payable. Then you arrive the tax liability, balance tax payable on taxable income, balance tax on taxable income. Then part B of the computation, tax on final withholding payment. Final withholding payment received, liability is relieved liability, right? Already paid, tax deducted at the source. So this is the discussion on charging provision, student. Still you are not clear about what comes under this employment, business, all those are not yet clear for you, I know. But from future discussion we will learn. I'll give some overall understanding, student. Now this format, for this format I'll give overall understanding. Now this assessable income part, total assessable income part explained under section 4, right? It says resident persons world income is liable, non-resident person only the income from Sri Lanka is liable, right? Total assessable income part. Now there is an order in that, right? Then employment income section 5, business income section 6, investment income section 7, other source section 8, and section 9 exempt income and third schedule exempted income, that does not included under any assessable income that is exempted, that would not include under any of these income will be explained under section 9, right? Then qualifying and payments and relief section 52, right? Taxable income section 3 we learned, section 3, right? Tax rate, yeah, first schedule, section 2 first schedule. These credits are under different schedule. 90 self-assessment tax payments, WST coming under section 83 to 85, 6, all those sections likewise, right? So these are the provision. Further, when you compute business income and investment income, there are certain expenses that can be deducted or cannot be deducted. Those are disallowable expense under section 10 mainly. Then main deduction section 11. Main deduction explained under section 11. Specific deduction explained under section 12 to 19, right? So when computing this assessable income, these section important. Assessable income means gains or profit, right? Remember that. We will learn when we looking at each section. For you to get overall understanding, I am explaining. When computing business income, that means your revenue minus expense. Here these section explain what expense that you could deduct or you cannot deduct. you can deduct or cannot deduct explained under these sections, right? So these sections are very important. These are the areas that examiner testing. All these areas are the examiner testing. Up to section 19 is very important for basic tax computation, right? Section 20 we learned year of assessment. Section 20 year of assessment we learned already. Section 21 onwards method of accounting. Now you need to understand, when you take income into consideration, is it when cash received or is it in accrual basis? That's explained under method of accounting, section 21. Likewise, there are many important sections after that. You should know up to these section at least, right? So we will discuss these section in coming sessions, right? Up to now, you need to memorize this format. This is very important. If you look at past papers and every question, your previous level papers discussion, all are discussing, all are doing computation based on this formats, right? This is the widely accepted format, and this is there in the Inland Revenue published return of income. Commissioner General published return of income. You can download it and see under IRA website, Department of Inland Revenue website. It is there, right? You leisurely read all this, right? If time permits. Now you have times. Still you are at beginning, no? Beginning of your classes, no? If you are at the end of your examination, if you are at the verge of your examination, don't waste time on looking everything. Just focus past papers, right? Not just past papers, papers that we are doing. Right. 2025 December periods in discussion is very important. I have covered every section in there. Right. Okay, student. So let's go with other areas in coming sessions.